Welcome everyone to another exciting video. Another one that's gonna help you guys and girls in your trading journey and trying to become profitable. With today's strategy, it's actually a real good one because of once you spot this strategy, it's a big mover. You have some strategies, they move, and you'll get small profits. But this strategy, once you spot it, you're gonna get some massive gains, and I'm gonna show you how in this video. And if you like the content, go ahead and hit that like button for me. By the end of the video, you can hit it now. That'll help support the channel. But if you want to wait till you see the video, that's fine. I'm quite sure, I'm not 100%, but I'm quite sure you're gonna like what you see here. And if you do, go ahead and hit that like button for me. It helps the channel. And also, if you want to keep up with strategies like this one and many more that I have, go ahead and hit the subscribe button. That way you can be notified when I drop new videos in the very near future. Anyway, getting right into it, guys. So today's strategy is called the base breakout strategy. Okay, so what that is basically it's a strategy where, let me get my markups ready. It's going to be a strategy where after a strong move up or a strong move down, price basically has to take a breather before making this next move. And this usually and almost always happens after a very strong move up or either a very strong move down, followed by a period of consolidation. I'm going to go ahead and illustrate it while I'm talking to you so it comes off better for you. All right, so an example is, you have a price that's coming down, okay, and then it bases out. It actually kind of does like a this. It kind of consolidates, and it doesn't. You'll know it because it doesn't, really make new higher highs, or it doesn't really make new higher lows. It just kind of standing in a point. Okay, now once you see this, you go ahead and mark it up. You mark up the base. You mark up this point, and we call this the base. All right, so in this example, you had a drop and then a base. Now there's 4 ways that this pattern happens. Okay, so you'll have a drop, base, and a reversal where it shoots up. You have a drop, base, and a continuation down, a big strong move that continues to move down. You have an up movement, a base, and a continued move up, or an up movement, a base, and a move back down in a reversal. Either one that you see is going to usually be a strong move coming out of it, like so. You'll see something like this coming out. You would take your entry coming outside of the base that you've marked up. So what's actually happening here, it gives the mark. What happens is, once the market makes a strong move, it basically needs to catch its breath, so to speak. You know what I mean? It has to catch its breath, and in the terms of the market makers, it's basically gathering liquidity here, okay, before it makes its move where it really wants to go. So it'll make its move, and then it has to gather liquidity. You're going to have some sellers here, some buyers here that's going to go ahead and get in and get out quickly because they're not making the move. It's not making a move fast enough. So they're going to get out for a small loss, and therefore liquidity is being gathered here before the next move, whether it be up or down. Now, like I said, it has 4 ways of happening. So once you mark up the box, you're not concerned on which way it's going to go from there. Okay, it could break out upward, it could break out downward. You're ready either way. Once it breaks out of the box on either side, you get ready to take entry. And in most cases, it's gonna go ahead. It's gonna make a strong move where you're gonna be able to make a good profit. All right, and as other strategies, as well as this one, it works on all time frames. The higher the time frame, the better. Higher time frames rule the lower time frames. Always remember that. So when you see a pattern on a smaller time frame, you may get a small move, but on a larger time frame, as is this is on a daily, usually you're going to get more bang for your buck. All right, so let's just get right into it. So this is a chart of Capital One, and I have a base marked up here. All right, guys, so how you tackle it, as you can see, it made a strong move down followed by a base, basically showing you that price couldn't make a lower low, really couldn't make a higher high. Is consolidating, it's going sideways. Now once you see this happens, you go ahead and mark this up, and as soon as it breaks out, whether up or down, you go ahead and take your position. If it's going up, you take the buy. If it's going down, you take the short or the sell. Okay, and as you can see in this example, it broke out a little over the 160, around 161, 162, and it got all the way up to 170. So that's, you know, a good $8 gain, $8 on the stock, you know, gain on that position. And this is actually around this area at this present moment. All right, so that's one example. I'm gonna make this video quick, guys, because it's pretty straightforward strategy. And then the next one you have, also I'm going to mention that they're not always going to be the prettiest. Not every box is going to be the prettiest. What you want to see is, the first thing you want to see is a strong move in one direction. In this case, it was a strong move down. This is Microsoft here. Strong move down, followed by price couldn't basically make new higher highs. It couldn't make a low up under this point. It's just basically ranging. Once you start to see this ranging action, you mark this up. It did a small fake out, but it did not close above the base here. So once you got it marked up, price drop, it based, it catches its breath before making its move that it wants, its intended move. Okay, guys. All right. So if you would have caught this buy here, or even, you know, once it closed, you caught the buy. You know, this is it went from around like 240 to like 260. That's $20 in movement, in price movement. You do the math on that, depending on how many shares you got, how many contracts you got, how many pips you got, depending on, you know, if you're doing forex. It still applies. Okay, so yeah, you see here it based out. You mark that up, and you'll see this pattern happen quite frequently. It happens in longer versions such as this, and then you have little smaller ones. You know, you can probably mark this one up here. You can mark this one up because price was, you know, ranging in a small area here. All right, let's go to the next example. Now this is Apple. Now on this chart, there are multiple points of drop base rally and the base breakout strategy here, and I'm gonna walk you through each one. So you see here, you know, with Apple, it dropped down, you know, pretty feverishly. You know, it was a strong move down. You know, it wasn't just like one or two little small little. It was a strong move down, followed by the base. You have the base marked up here. This one was pretty. This was a pretty one here. You know, not all of them are this pretty, but this one here was pretty. It was literally like a square here. You know what I mean? You see, price, it literally was moving in a square fashion here, and before breaking out of that box. And you know, that was a pretty sizable move here. All right, and then you got another one of drop base. This one isn't as pretty. And like I told you, not all of them are going to be 100%, you know, textbook, by the book. You know what I mean? Exactly as square. But what you want to see is where price is just, it's not making higher highs, it's not making lower lows. It's ranging. That's what you look for. And you want to make sure you see this after a large move, not just anywhere on the chart. All right. And it's actually another one here, but I'm going to stick to this one for now. This, it dropped. It stayed in the range. Once it broke out of the range, it was off to the races. Now, here's actually another one that I didn't mark up. But as you can see, this time it rallied. It based. See the base here? I'm marking it up for you right now. And once it came out of that base, you know, it came out strongly. That's what I was saying about this pattern in the very beginning of this video. This is one of those patterns where once you find it, it makes a strong move. Like, it makes a big move outside of the box. and it's usually it usually goes on for a couple days, or if you're doing it on an hourly for an hour or two, it usually is a pretty strong pattern. Some patterns, you'll get minimum goal, you'll get freaking 50 cent, a dollar on it. But this is one of those patterns where once you spot it, because what happens is, like I say, price is getting squeezed almost. It's similar. It's not like the wedge, but it's similar in the fact that it price is like getting squeezed into a certain area, and at some point it wants to go one way or the other. It's not going to stay there forever. And so once it makes its move, it makes its move. All right, so that's another example. Then you have one more. As you can see, it made a base. Price couldn't get up under this. Price couldn't get over this. And then when it did finally get over this, it was gone. It was out of there. Okay, so I'm gonna do one more example. The next example is a more textbook example. This is Tesla here. Tesla, this thing went by the book. Look how clean these bases are. This is what you want to see. I mean, this is your easiest chance of marking it up, spotting it, and making your money here. This was like, textbook. You see Tesla rallied up, and this box, you can send this through UPS here or FedEx. This box is clean. So you see it went up, it based, it did a rally base, and it dropped. And you look at the drop, you'll say, well, it wasn't that much of a drop. That was like petty. That was small. But look at where it was. It was at a little. It was like the 680, 675 area, and it got down to almost 600. It got down to like 620. So that's like $50, man. $50 move. So you know what I mean. This pattern is very powerful. It's made me a lot of money. I've used it before. I use it when I see the pattern form. I still use it, and I mark it up, and it's powerful. Going to the last example here. You see this, it went up, it did a rally, it did a base. Nice clean base here, very nice. I mean, the bottoms are almost exactly identical. The tops are like almost like to the T. It doesn't get much better than this. So if you find this, you're good. But anyway, you see it rallied, strong move up. As I said, it's one of the requirements of it. It has to be a strong move up or a strong move down. Not like a little move like this or something like that. It has a strong move, because that lets you know that the stock is full of momentum at that moment. It's full of momentum, and something has just stopped it temporarily, but the momentum is just building up. Is what's happening. But you don't care which way it goes out. That's going to be the key to your really going to be the key to your success. Is the fact that you're not gonna care which way it breaks. You don't care. Like, you're not saying, okay, automatically it came up, it got in this box, okay, I'm looking for the break up. You're not worried about that. You don't care if it goes up or down. Whichever way it goes, it's gonna go strongly, and you're gonna be ready. Alright, so in this case it went up, made the box, and then it broke down. That was from 700 down to 650. Another $50 move. Alright, so I'm sure you get the point here. I want to make this video to keep you guys, in tune with the market and all the different facets of it, because this market it's a lot of ways to tackle it, and little by little I'm going to show you guys a whole lot of different ways, and each one can make you very, very, very profitable. Okay, guys, so like I said, if you like the video, go ahead and hit that like button for me. Go ahead and subscribe, tell a friend, tell a neighbor, anybody who's interested in learning how to trade. I'm here for you. I've been doing this a long time, and I'm willing to give you guys all of the info that I have. All right, until next time, happy trading.